Hey, this is Dylan Fry, the real estate guy, here to be your guy for any real estate needs. Hey, today we are going to be doing an interview. We brought back in Ammon Dorsey. He's the lending guy. We are going to update you guys a little bit on his story, what he's doing, what he's got going on, and then we're also going to be talking about how the market is right now. What are some things that can help you in your home search, and just looking around the Kansas City area and how to get through a loan process, what things are taking a little bit longer, and just how to prepare for it. Now, if this is your first time watching interview on this channel, make sure that you hit that subscribe button and then also hit that little bell for future notifications so that you'll get an update on every interview we do with a new person each week. Somebody that's going to help you in your move to the Kansas City area, or if you're selling a home in the Kansas City area, some people that are going to help you repair your home, get it ready for market. We're bringing in new people every single week. Now, like I said, today we have on Ammon Dorsey. He is going to be talking about home loans. He does residential lending, and he's going to be able to help you find the loan that best fits you. Let's get into it. Ammon, tell us a little bit about yourself. What's your story?
What's my story? Well, I got into lending. This is my third year.
Yeah.
I really got into it because it's a way to have as much time. That's not what I wanted to say. I got into it because, what did I get into it for?
To help people, I'm assuming.
Yeah, I got into it about 3 years ago with the main, idea to help people. And, purchasing a home is most people's biggest purchase they'll do in their lifetime.
Yeah.
And it creates generational wealth, and it's a great thing to be a part of.
And that's the part that I love about it, just helping people find their dream home, or find the home that they want to go into next, or an investment property or anything like that. It's extremely exciting because I went to school for finance. So helping people with their finances and setting up dreams and their goals and helping them accomplish those is one of my favorite things in the world to do. So having people around me to help everybody achieve their goals, that's why I do this. Is I find new people all the time, just trying to reach out and talking to people and saying, hey, how can you help my people, my clients, my followers that are on here as well? How can you help them? And that's a big thing, is helping people with real estate is huge. So with the lending market, there's been some things that have been changing, and a lot of stuff going on. You hear a lot of stuff. Is now the time to buy? Interest rates are high, different stuff. What have you been seeing lately that's going on?
Well, the FHA actually lowered their monthly insurance premium.
Which is huge.
It is huge. It's a big difference. It's like 30 basis points. It's made a lot of difference for people in their monthly payment, because FHA's mortgage insurance is based on the loan amount.
Correct. So you're talking a lot about first-time home buyers. They're coming in looking to find a home. Now, just for viewers, for their instances, FHA is a little bit different. There's multiple government-backed programs, FHA, USDA. What's the main differences between them?
Besides being government-backed, FHA, for example, again, we have mortgage insurance on the FHA. With conventional loans, that mortgage insurance is based on all of the compensating factors like down payment, credit score. FHA is solely based on the loan amount and how much money you put down. So
let's talk a little bit. I've been having some issues. Just want to talk to you about it on the lending side. How have you been having any issues with appraisals? How fast is stuff moving for you?
Sure. Appraisals have been fine, if you will. We haven't had any issues. And I think the thing that gets brought up a lot is people talking about the housing market crash. They're expecting things to crash, and that could mean different things to different people. But the thing people need to realize is, even if someone's overpaying by their definition for a home and they're putting cash down, the next home that sells is the appraiser is using the home that just sold for, quote unquote, over what it was worth.
Correct.
So when you have all of these houses going above asking, it's inflating the worth of all the other homes.
It's constantly an upward trajectory.
Right.
And I think that's the hardest part with everybody talking about the home crisis or anything where we're going to see a big drop. People don't want to sell for less than what their neighbor is. Yeah. So they're not really willing to do that. And there is way too little of inventory even now, and inventory is starting to creep up, but it's still too low. There's too many buyers in the market.
That's true. And another thing to point out is we're going back to interest rates and how people think they're high relative to what they were
a year
ago. And that's the other thing that's going to keep inventory low is people aren't moving just because they want to move because their interest rates are lower. You're finding people are moving because they're, relocating for a job or something, so they don't necessarily have a choice. But the people that may want to upgrade their home or a different view or a different, state or whatever, they're emotionally attached to that 2 to 3% interest rate. And that alone is going to keep inventory down. Correct,
because a lot of people were living in the refinance world, and that's something that I know a lot of lenders have. It's kind of an income stream that got cut off.
That's right. Yeah, they base their business on refis without really focusing on purchases and kind of biting them in the butt.
So what does that look like when you are focusing on purchases? How do you get most of your business?
All of my business is referral based.
That's awesome.
Yeah.
It's hard to build, though.
It is hard to build, but I look at it as I am genuinely trying to help people. Yeah. And I am in a position where someone needs me to finance it. Someone needs someone to finance it, so why not it be me? Yeah. So putting myself out there, meeting people, doing a good job, building trust with everybody, they're open to referring me.
Yeah, and so how do you help people when they come to you and they've got some things that they need to work on?
Yeah, it depends on what they need to work on. One of the biggest questions is, does it meet your financial needs, wants, and goals?
Okay.
And, say they come to me and their credit's not where it needs to be, then I'm going to help them, either direct them towards someone that can help them directly with their credit, or if it's something that I can advise them on to help improve that.
Yeah. And that's one part that I really love about what you're doing is I know we have a few clients that we're really helping them with their credit repair. So talk a little bit about that. You've got a department that you can kind of refer that stuff over to.
Yeah, it's we have a particular program actually that you are able to artificially manipulate, what's on their credit to spit out a score. Uh-huh. And so I'm able to, put in different scenarios and see where their score is gonna pop out.
Where their score is going to be.
Yeah. And
then help them with real advice. Because I know that's one area where a lot of people, when they're looking at, I've got bad credit or I've got not so great credit, and they go to find somebody to help them, and a lot of people push them off to say, hey, here, just go to this, go call this credit repair company, and then they go spend $1,500.
And it could be a scam.
And it's, it doesn't do anything.
And that's the thing with credit is there's so many layers to it. Someone can have a 740 credit score, but their oldest trade line is 2 years old. That's going to be a lot weaker when it comes to risk factor than someone that has like a 680 credit score, but their oldest trade line is 2001.
So when you're talking about that, how does that illustrate? Because you're essentially going and finding investors for these.
Correct.
For these loans. So what are some things that kind of are those minimum baselines that people are looking for when they're buying these loans?
And it goes back to there's a lot more to a credit score than just the number.
Mm-hmm.
Like I said with the numbers previously, but it's also what's on there. So if they have, mortgage late payments, that's going to be a problem. Or if they have a previous foreclosure, there's a waiting period for that. Or a bankruptcy, there's a waiting period for that.
Okay.
Or if they have collections or charge-offs.
Yeah. So you've been in it for about 3 years now, right? What are the biggest things that you didn't realize going into it? Like now that you've been in it for 3 years, you've seen some different stuff. What are the biggest misconceptions that you've seen?
The biggest misconception is money down. How much people need to put down. That's just the easy answer. Just for those viewers out there, there's programs that are 100% financing if you qualify. There's programs with 3%, 3.5%. There are advantages to putting down more money most of the time, but there are options for people that do not require 20% down.
Which goes into what you were talking about earlier, where FHA took their mortgage insurance premium down here recently. That's a way that, that's one of the big advantages or disadvantages of putting less down is that mortgage insurance premium.
Yeah. And I mean, FHA lowered their monthly mortgage insurance premium by enough that it's noticeable on people's monthly payments.
Yeah, which is huge. So let's talk a little bit about, because I know this is one thing that comes up all the time, and I've had people call me and say, hey, who did you send us to, or what? And I think it's just something that people need to know about is when escrow changes. What are the big factors that cause escrow to change? Because if they're on a fixed note, it's not you guys.
That's absolutely correct. So the 3 things that are going to go into escrow is going to be your mortgage insurance, your monthly hazard insurance, and your taxes.
Okay.
And obviously, insurance and taxes can adjust.
So that brings up an interesting question. Does mortgage insurance premium go up at any point throughout the life of the loan?
It does not.
It does not. So that's a fixed cost.
That's correct.
Where your insurance and your taxes, those are the ones that people, I just seen where people call, when I was in the insurance world, a lot of times they'd call and it was either us or it was the taxes, and that would go up, and we'd be hunting. Why did this go up?
Yeah. I mean, I try to touch base with people on that. That's why when you initially close on a home, you're putting a year of insurance up front. You're paying the taxes, so at the end of the year, there's enough in the account, but you also have months reserves there. So if and when something goes up, there's going to be money sitting there to make up the difference.
Which is a huge point to talk on when we're talking about what people are having to bring to the table. I think a lot of people get hung up on how much they're putting down is different than what they're actually bringing to the table because of what you just talked about, the closing costs.
Yep.
What goes into those closing costs?
So closing costs are made up of title fees.
Okay.
You're going to pay your appraisal in there. You're going to pay for your credit report in there. But the main thing that is going to make the bulk of the fees, if you will, is going to be your prepaid items. So you're going to pay for a year of insurance up front and 3 months of insurance reserves. And depending on when you close this, how many months of taxes that you're going to pay out.
Correct, because they normally want at least the rest of this year's.
Correct, and then 2 months of reserves.
Yeah, awesome. Yeah, which is something that I like when people are thinking about, hey, what's this number look like? I'm trying to buy a house. That's a misconception. And there's a way that we can always ask for some of the closing costs to be paid and stuff like that. We can build those into contracts. So if that's something that you're concerned about on what amount you need to bring to closing, and you're really focused on, hey, I have this 3.5% or, and then I have some reserves, but I don't have the closing costs. We can always build that in and figure out. And I think that's huge by having a lender and a realtor that work on the same page, because sometimes when I run into clients and they have their own lender or somebody that I'm not used to working with, it can be a little bit hard to communicate with them.
Yeah. I mean, the first thing when I meet with someone and go over what they qualify for, the next call is going to be to you. To cover that exact, obviously with their permission, but to cover that exact conversation and what they have available and what their needs, wants, and goals are to make sure we're all three working together. And
I think that is huge. Like everybody that's involved in the transaction has to be on the same page.
We all rely on each other.
Yeah. And I think that's one way to tell whether you have a good realtor or a good lender is how involved they are in the transaction and how much they're communicating with.
Absolutely. Communication above all.
Because I should be touching. I just sent a text out today that said, "Hey, we don't have any updates. We are still waiting for this one thing, and we're waiting on an appraisal because there's some land splits. It's a little bit hectic, and that's what you have to when you're looking at purchasing or you're looking at selling or anything like that. You have to be aware that there's a bunch of moving parts, and there comes a time in a transaction where there's a dead spot, where you're just waiting on stuff." And and I feel like that's where so many realtors and lenders lose people.
Or they drop the ball and they're communicating great in the beginning. They're all excited for this transaction, and then they get busy with other things and they just kind of let people sit and wait. I think it's important to update people weekly.
Yeah.
Even if nothing's happened, just checking in, making sure you don't have any concerns or questions or anything.
Correct. And it takes 5 seconds to say, hey, I don't have any additional updates. I just want to touch base with you.
I'm here.
Do you have any concerns at this moment?
Yeah.
Because they're going to voice them, and they're voicing them to somebody if you're not calling them.
That's right. And I think you and we do this every day, and it's not as big of a deal to us just because we're doing it every day. Like we can lose sight of that. But I mean, person purchasing a home, that's a huge deal. You need to keep that in perspective with your communication.
And it's stressful. I mean, I've had people call me and and that was early on in the process when I was still learning about, hey, how does this transaction move forward? And they would call me and be like, are we still buying this house?
Yeah.
And it's like,
whoops.
Yeah.
I mean, I should have called you to let you know everything was okay.
And you find some people that'll call you every 3 days. I'm of the mindset, if you have a question, call me instantly.
Yeah.
And if I'm going to update you regardless weekly, but if you have a question, call me instantly. If I don't answer, I'll get back with you.
Absolutely.
I'll get back to you pretty quickly as soon as I can pull out my phone and get back to you. I'm gonna call you back, and then I'll answer that question, or I'll go find the answer to that question. And giving people that feedback up front helps with that transaction a ton. It's like, hey, if you have something, call me.
Yeah, absolutely.
And if you have something you don't like, or that, hey, I want to do this.
There are no dumb questions.
Correct.
Everyone learns something at some point in their life.
And I've learned a lot about real estate transactions just from questions that people have asked.
Yeah.
And you don't really realize that different stuff that goes into it. So let's talk a little bit, just because I want to touch base on some stuff. We've had you on here before, but I want to touch some base on some stuff that we touched on before, because I think it's so huge and people don't realize it. When you're talking about those government-backed loans, there's a little bit extra that goes into those on the appraisal report. Can you explain what the difference is between the appraisal and an inspection? Because I find people that say, hey, since they're going to do an inspection on the appraisal, we don't need to do an inspection. And
right. Terms get mixed up a lot. The biggest thing is the appraisal is what determines what the home is worth, and it is required from the lender to ensure that the home is worth that. That's
Correct.
The appraisal. Now, the inspection is a voluntary thing that you do as a buyer, just to have a third party look at the property and let you know if there's anything that is unforeseen that may come up in the future.
Correct. And I think inspectors are there to protect you from making a bad investment.
Everyone should get an inspection on a property.
And it's huge for them to be like, they're going to go through and nitpick that.
Yeah, even if it's something that doesn't need to be addressed right away, it's good to know.
Correct. Where on the appraisal side of stuff, they're only coming in to make sure that they work for a specific client, which is whoever ordered the appraisal, whether it's your bank or it's your lender or whoever it is, they work specifically for them. So they're coming in to make sure that they're not making a bad investment.
That's correct. And then when it comes down to when we start splitting the difference between like VA, USDA, FHA appraisal versus conventional appraisal, there's a little bit more that goes into it to ensure the property is up to their standards.
Correct.
Peeling paint, for example, or we had a guy who the floor, remember he pulled up the floor in front of his dishwasher.
Yeah.
He had to replace the floor, and then the appraiser had to come back out and verify that was done. So
correct. GFCIs, those come up a lot.
And that's the thing of having a realtor that you know and trust, because you're going to be able to see that before you even put the offer in.
Correct.
That might be a problem.
And it's something about talking with people as you're going through, like, hey, is this something this is going to need to be repaired anyways?
And the negotiations, it starts going around in your head too, the possibilities for that.
So speaking of that, having a realtor and a lender, I've been in situations to where, and just to give people feedback, to where you need to connect the two links, the realtor and the lender. One process that I normally do is you don't order an appraisal until I tell you.
Because of the inspection, yes. Correct.
Because there's a period of time, whatever your inspection period is, there's a period of time where this potentially couldn't go through if something pops up and they're not willing to fix it, or it's just overall bad investment. And at that point, once you've ordered the appraisal and they've scheduled it, they have to pay for it, correct?
Yeah.
And that's unfortunate.
Once the service is completed, and if it's done before the inspection, it's never good.
No, it's a nightmare. And
I should say it can be.
It's always setting up. And listing agents will use
recent.
that. Yes,
I had a problem with that.
Listing agents will use that as leverage if they know that they've already paid for an appraisal, because they know that appraisal is $500 to $1,000, and not very many people just want to lose $500 to $1,000, and you don't get that money back.
No, it's a service you're paying for.
Correct. So I had a situation here recently where it was a lender that I don't work with all the time, and I sent them the file, sent them all the notes on it and everything. Could not get them on the phone. It was a bank that I don't do a ton of business with. They've got a call center. You can't get a hold of them very often. I kept calling them just to try to give them feedback on it, because I knew what we were going into, and I didn't want them to order the appraisal. We did inspections, sent over our inspection report because we had some issues that came back on it, and the listing agent hits me with, well, they were there yesterday doing the appraisal. I thought everything was fine.
That's bad business.
That's what I was like, what?
Yeah, who's on the hook for that now? Is the lender going to take it to the chin, or is the buyer going to have to pay
Correct.
for that?
And it's a situation where we had a longer close too, so I wasn't like...
There's no rush, right?
Correct. And now if you go back and look at notes, it did say don't order appraisal until we get inspections done. But it's those type of things that when you're not working together, and when people have multiple levels, that when you're talking about working with banks or anything, I'm not trying to crap on anybody's process or anything like that, but when you're working with a online company or somebody that is doing 100 clients a month or whatever, they don't have the same dedication to you. All they're doing is taking applications, moving it to the next line of the processor, this or that, and they're not following up with you, and they don't really care.
Yeah, I don't think it's about talking bad about anyone else's process. I think it's just comparing why my process is advantageous to you as a buyer, and why working with someone local has its advantages, and why working with someone that works closely with your realtor has its advantages.
Yeah, and that's huge, because then I'm looking at it, which negotiations went fine. We're still moving forward with the house, but it was one of those situations where I was like,
could have been real bad.
That sucks. And it's one of those things where I should have, I always try to take ownership in those too, because I'm like, hey, I should have harassed them a little bit harder. And it's one of those things where I should have just left multiple messages, because then there's no gray area.
Yeah, but if you're taking the heat, if you will, for that, you're just going to build more trust with your client.
Correct. And it wasn't an issue, but this stuff to be prepared for. Some other things that I think could come up on is communication from the buyer. If you're looking at moving you need to communicate with your lender and your realtor before you make any big decisions. It seems like, hey, there's a 60-day period. If we get you approved and we are buying you a house and we're set to close, say it gets you approved in 30 days, we find you a house, we've got a 30-day closing, 60-day period, to where any financial decisions you make, you've got to tell us about.
Oh, yeah. I see where you're going with this.
Because that's a misconception that I think a lot of people have is...
Once you're pre-approved, you're approved. Recently, actually, this just happened last week. I had a buyer who's been looking for like 6 months. She's been pre-approved. Just stay in touch with her, making sure everything's updated. And I called her because they want to put an offer in on a home. Just want to check and make sure nothing's changed. Oh, yeah, I bought a car. Yeah. So I had to, rerun her credit. And thankfully, she earns enough money that it didn't offset it enough.
Correct.
Debt to income, and it didn't affect her credit score because she's had such a strong profile. But that could have been really bad.
Yeah. And one thing that I don't think people realize when it comes to credit is the time periods on loans. So they think, oh, well, if I go in and I trade in this car for this car and the payments are relatively the same, it's not going to affect anything, which isn't true, because now you're closing an account and you're opening a new one.
Right, and there's probably a higher balance. You're borrowing more money.
and now it's a little bit riskier for a investor or whoever's looking at the loans.
Yeah, and we always have to run a credit refresh before closing. So even if you get everything pulled, everything's good to go, you go under contract, just like employment, it's going to be checked again.
Correct.
And even if you don't disclose it, it's going to pop up.
Yes. So don't quit your job.
Yeah, that's not good.
Or I had one that a situation where we got 2-3 days before closing, and we were coming down to it, and I was like, why aren't we getting this clear to close? And I finally got a hold of the lender and was like, hey, what is going on? And they were like, we fixed it. And I'm like, what? And they're like, well, they had taken out some credit card debt and their new statements hit, and it screwed up their DTI.
I mean, we've had it to where we do the 3-day prior to close verification of employment. It just has to be a verbal one, and it came back that they switched from full-time to part-time. So just you got to be, conscious of those things.
And in that situation, because there's a lot of people out there that do work part-time, what are the stipulations around that?
So if we're going to talk about part-time specifically, as long as they qualify, if they've been doing part-time for 2 years, just like anything, overtime, 2 years consistently. If you've worked 2 jobs, you need to work both jobs for 2 years.
Gotcha. You got to show that you're going to
it's a 2-year rule.
Gotcha. So what if, and just asking some what if situations, on that person that went from full-time to part-time, now can you use their part-time hours only? Or if they've been at that same job for the last full?
Yeah, it would have to go to part-time hours because it was actually their wages changed.
Correct. That's crazy. Yeah. I mean, that's something that people don't ever take into account when you're thinking about doing stuff and making a move. And sometimes you don't even realize it's a thing.
Yeah. I mean, and like you said, there's a whole 60-day period. I mean, 2 months is a long time. Life happens fast. There's a lot of things going on, especially if you're not communicating on a regular basis. Something happens and you don't think about it affecting your house closing in 30 days. And I get it.
Yeah. And so to build on that a little bit, I know a huge thing over the last few years was layoffs. With COVID and everything like that, I had a company that had, and this was before I really got into the real estate side, I had done a loan for them or pushed them through to a company, and they told them, yes, we can do the loan. The day before closing, they called, or 2 days before closing, they called to re-verify, and they had been laid off. They worked for a Ford Motor Company here in Lake Como, and they'd been laid off. They told them they were laid off and that they didn't have a return to work date.
Yeah, that's the big thing, not having a return to work date.
And that was, they essentially had told, and I had been involved in multiple conversations, and that's where I go back to make sure that people do understand your entire situation and you're completely open with it, because that's the worst call you can get is, hey, we can't close your loan.
Yeah. Sometimes as a lender, I feel like I'm asking 1,000 questions because I am, but they're all, important.
Correct. They're all important. And if you get people that work together, there's a lot of times to where we'll spend, even when you're working with other agents, buyers, or whatever, we'll spend time just throwing ideas back and forth.
Absolutely.
Or if I've got a situation, hey, what's this look like?
Right.
Like I was texting you this morning about something that is just because I was like, hey, do you know what this is?
Yeah.
And it's one of those things where you have to have those relationships, and you need to have people in your corner that have those relationships so that they can bounce ideas, because real estate isn't easy.
That's correct.
It is a very difficult transaction, and you want to make sure that everything goes according to plan, and it takes communication. It takes people knowing what's going to happen, and how do you handle a hiccup. So let's touch base a little bit on that. Let's say somebody has a hiccup. We've signed the contract. We made it through inspections. Okay, now something's changed. What are you doing after that?
Well, there's a lot of things that could change.
Correct. But let's say you just got bad news. How fast? And I'm pushing you in this direction because I know the answer. And how fast are you communicating with them?
Instantly.
instantly.
There's no like, oh, I got to make this phone call.
And that is something that I don't think is consistent across our industry.
No, it's not. People always, push. What is the saying? Push off today's problems for tomorrow.
Yeah. I mean, bad news doesn't get better with time.
No, it does not.
Not at all.
And you don't need to sugarcoat it. You just tell them like it is because it is what it is.
Correct. And if you can find a solution, awesome. If you can't, then you might as well nip it in the butt when you can.
Yeah, and be honest.
Yeah, I think that's huge. So let's talk a little bit about you've been around the Kansas City area for a while. A lot of our channel is people moving to the Kansas City area. And so let's talk about what are some good things about the Kansas City area that you love?
I love Kansas City because it's all spread out.
Yeah?
It still gives a small town feel as much as you can in a city. But, yeah, it gives you that small town feel because I used to live in Chicago, and it's not the same thing. The Midwest hospitality in Kansas City is real.
People are nice. Yeah.
Absolutely.
Today it's booming. We've got the
draft, yep.
The draft going on today, so everybody's out on the streets. I've seen there's so much red out there right now.
Oh, yeah.
What are some things that you think people, so going from different cities and whatnot, what are some things that you think people should be aware of before they move to the Kansas City area that may, I don't like to ask people what they don't like about the area, but what are some things that could cause people some hesitation if they're moving from a coast or
the only thing I can think of is the 1% Kansas City earnings tax.
Oh, my gosh.
Really, though, when it comes down to, cost of living, availability of housing, maybe people don't like the weather, but what are you going to do about that?
Okay.
It was, 70 on Saturday, and then it was like 42 degrees on Monday.
That's, yeah. That's one of the biggest things is you never know what you're going to get on the weather side. And I get that from every single person that comes in here.
That's about it.
Yeah. So you're actually going through a move right now yourself.
Correct.
So talk to us a little bit about that process because you're selling a house, buying new construction, correct?
Yeah, we're building.
Yeah. So how's that been?
It's been great. You're helping me sell or list our home, and so we've just been moving everything out of it so we can stage it. And it's a new process being a lender and buying a home. I've bought a home before, but I wasn't a lender. Now that I'm like in the middle of it and know how it all works, and I'm using my manager as the one doing my loan, so I'm kind of taking a step back just to see what the process is like.
Yeah,
experience it, if you will.
It's one of those where you're 10 feet above and you're just kind of watching.
Yeah, it's a cool experience. Yeah,
it's different. That's one of the big things is I'd sold real estate before I got my real estate license, and it's different doing it once you have it.
It is.
Because now you think about so many things that you didn't think about before. Before you were just like everybody else. You're just like, hey, this is a huge investment. When can we have this done?
Well, it also reminded me, because then it started thinking about back when we bought our first home and how much I relied on the lender, realtor too, but from my position, how much I relied on the lender to tell me how the process was going, to ensure me that everything was working out, because, they ask you for documents and then you wait. And then they ask you for a document and then you wait. But knowing that, I'm a lot more expressive and, involved in their communication because I know what that feels like and I don't want to wait. So ask for the document, explain what that's for. And then if, it's a week waiting period, I'll touch base with them in a few days and just let them know that we're still waiting and everything's fine.
And it's one of those things where when you're in the business, there's two types of people. And this is just my opinion. If they deal with real estate and whether it's a realtor or a lender or anything like that, they're either really fast and efficient at getting their stuff back, or they know it's not that important and they wait until the last minute. Right. And I say they know it's not important because they don't prioritize it. Every part of it is important. They just know their deadlines and they will literally wait till the last second.
Mm-hmm. And some of that stuff can, dequalify you.
Yeah.
So waiting is not going to do you any favors.
No, and that's one thing that anything you're looking at in you just have to be aware of it. And if you're a realtor or lender, then you may know the guidelines, but don't stretch those because you can make somebody's job a nightmare.
Absolutely.
And I've seen that happen, like where people wait because they know that they have time. That's why anytime I set a deadline, I set it 3 days before the actual deadline.
Yeah. Yeah, I mean, we always try to get people's final closing documents at least 10 days before closing.
Yeah. So why would you want to do that?
Just so there's adequate time and it's not drawn to the line, not drawn to the wire in case there's something there.
Correct. And so talking about those closing disclosures and everything, what's involved in that?
Sure. So we'll just walk through the process. You apply, you go under contract.
Mm-hmm.
Once you're under contract, we have to send you a loan estimate within 3 days. And on that loan estimate, it's just a breakdown of what we've discussed, what you've qualified for, what that financing on that home is going to look like. The next step is your closing disclosure is going to come out, and that has to be a minimum of 3 days before closing has to be shown to you. And that's when we do it. We try to do it at least a week before. But on your closing disclosure, it's your locked interest rate, it's your final monthly payment, it's your final prepaid items from the title company. Everything's balanced, and then we'll go over that line by line and make sure you understand it all.
Do those ever change?
If they do change, we have to redisclose the loan. So no.
That's huge, because that's one thing where and from the loan estimate side, and you get to that closing disclosure. When you get that closing disclosure, it's final. Mm-hmm. But that loan estimate, I've had people get confused, like, hey, why did this is a loan estimate? Mm-hmm. There's so many things that could change.
Communication. It goes back to communication. And like when I'm running numbers, I'll ask you for taxes or I'll look up taxes, and it's based on last year's.
Yeah.
And I'm also basing this estimated insurance payment on because it used to be in insurance, you help me with that, but what your credit score is, what the home value is, and it might be completely different if you have a lot more factors when it comes to insurance.
Correct. It can definitely be different. It can be better. It can be worse. And you could see huge tax increases from year to year. You have to be cognizant that there's so many things that could change.
Right. And people get hung up, not to talk too much about interest rates because they change all the time, but people get hung up on the bottom line of what rate can you give me. There are 28 individual factors that go into a qualifying interest rate. Mm-hmm. And that is one reason why the loan estimate and closing disclosure are so important, because it discloses all of that information and what you actually qualify for and any fees that you're paying to get that rate.
Which I think is huge, because people don't realize. I know some people, they're like, hey, I want this rate, I want this rate, I want this rate. And then when you look at it, it really wasn't cost effective for them to get that rate.
Right.
Because they were paying so much in points or different stuff.
And there's no one-size-fits-all mortgage.
Yeah.
Nobody wants a mortgage. We want a home. That's like us building our new construction home. Those are the numbers, and we want to make sure we can afford it, but we're a lot more excited about building the home and taking this next step in our life.
Correct. Because, the saying that you say all the time is marry the home, not the rate.
Correct.
All right, because you can always refinance if rates get better. If rates get worse, you're going to be sitting pretty.
Yeah.
Like, that's all. Heck, all those people that bought homes in the last couple of years, they're sitting pretty right now.
They are. They're holding on to them.
Yeah, and that's, again, why I don't see a huge crash coming, is because nobody wants to lose that 2 to 3% interest. What are some things that people should be? What are 3 things that people shouldn't do if they're trying to buy a home? What are some things that they shouldn't be doing?
Let me think of some that aren't what I said last time.
Yeah. Do you got any? So let me rephrase that a little bit. What are things that, and we have new viewers to this time as well. So what are some things that you believe are some keys to buying a home if somebody's ready? Where should they start the process? What's the best process for them?
Well, the best process is just going to be applying with a lender, because they're going to be able to see your whole picture.
Yeah.
And supplying them with the income documents, supplying them with the bank statements, so we can actually put together what you qualify for, rather than kind of putting it together and like, I think I can afford this, and then talking to the realtor first, and then it just doing it all backwards never works out.
I think that's huge, and that's one misconception that people sometimes you struggle to get that because people don't realize what payments are and what they're going to look like. So having that conversation with your lender is, this is what monthly payment I want. What can I afford?
Right. I always talk to people about working the loan backwards. Let's start with the monthly payment rather than how much of a home you want.
Yeah.
I mean, I get it because you don't go to a car dealership after you talk to your bank. Most people don't. You go test drive cars, get all excited, and then figure out the financing. But with a home, it's such a large purchase, and there's so many moving parts. You need to talk about financing first.
Well, and I think that there's a lot of online companies where people look to find homes that give you rate calculators.
Yeah, and it's a business. I mean, what's the number one thing for a business? They want to make money, and they want to draw people in. So lenders are going to advertise their best possible rate. Just like anything else, there's going to be fine print and things that are in front of you, but they're not necessarily,
correct,
in front of you.
Yeah, and the big thing that I was to touch on a little bit more is on some of those things, they're only showing you principal and interest.
That too.
And when you have a loan, you've got principal, insurance, taxes, interest, possibly PMI. Like, there's so many other things to where this could account for $500-600. I seen a tax the other day that was $9,000 a year. Like, that's $800 a month.
Yeah.
Like,
yeah. And it goes back to what goes into that qualifying rate, because a lot of times when you look at these online lenders and you read the fine print, it's based on 780 credit score, 20% down. Like, do you fit in that category? If you don't, it's probably not going to be an accurate estimate of what you're going to qualify for.
Correct. And the loan amount
it's a huge thing.
Factors
Absolutely.
into that too. So
28 factors.
Yes. And that is where everybody thinks that, and this is a common misconception. It's a misconception I had for a long time, that the credit score was the biggest factor.
Yeah. I mean, is it a condo? Is it a multifamily? What zip code is it in? What state is it in? How high is your DTI? What's on your credit? What's your credit score? What county is it in?
And
is it in a flood zone?
That's the stuff that's really fun. So originally before I got into insurance, my thing that I wanted to go into, because I understand numbers, I see them, and I'm just like, hey, I love working with this, and I can remember formulas pretty easy. I wanted to be an actuary.
Okay.
So I wanted to go into statistics, which is all insurance is a bunch of statistics, a bunch of factors.
Measure of risk.
Correct, the measure of risk. And same thing for credit profiles.
That's exactly right. I mean, when it comes down to lending money, it's all about what kind of risk are you.
Mm-hmm. And that stuff is a lot of fun. So that's why if you are thinking about, hey, I don't think I'm in a spot to where I can buy a house or anything like that, reach out to one of us, because I love the task of seeing your stuff and saying, hey, how can we manipulate this?
It goes back to helping people. I mean, I have someone right now that's about ready to qualify that I've worked with for 2 years.
Yeah.
If I don't care if you don't know where you are in the process, it goes back to you just need to apply so we can figure out where to start.
Let's see where to start. Give us the freedom to throw these things around and come up with a plan.
Absolutely.
And that is the fun. That is the most fun, in this entire process, and helping people with their finances and with the biggest purchase that they have, is seeing the excitement on their face when they're like, we got that clear to close, or we got that loan approval. So you're
sigh of relief.
Let's go find you a home.
Yeah.
Oh, now we're under contract. Those moments are,
it's exciting.
I got a text last night from a guy that he does so much moving and shaking. He's one of the investors that I work with. And he texts me and he's chomping at the bit. He's like, let me know when they've signed. And I kind of laughed about it. And he's like, I just love the feeling of being under contract. And he's always hunting his next deal, but it is such a nice feeling when you say, hey, I'm under contract. A lot of people get stressed out on it because they're still waiting for that close. But those moments are huge.
They are. I always tell people, let me take on the stress.
Mm-hmm.
Let me handle it. Just trust that I'm going to do everything right by you, communicate with you, and just be excited about the house.
Yeah. Yeah. Well, I really appreciate you coming out. I'm going to bring you back every now and then just to update us on how the market's going, how everything is, and talk about just different risk factors, different stories that we've seen with different types of loans. But before we get out of here, if somebody's looking at getting their loan process started, how do they get a hold of Ammon Dorsey?
They can Google my name, or they can reach out to you.
Yeah.
But, yeah, you can just give me a call, 816-885-3397.
Yeah, and some people get weird about their numbers. They're throwing them out there, but that's
Shoot me a text. I mean, this is 2023.
Shoot them a text.
I'm available. It's my personal number. Shoot me a text. We can chat, have a phone call. We can meet in person. It's all about you. Yeah,
it's fairly easy to get in touch with one of us. If you get in touch with me, I'm going to send you to him, and then you're going to be able to text him. We're going to get that process started, find you your dream home. Now, I really appreciate you coming out. Real quick, before we leave, what's your elevator pitch? Why should people go with you?
People should go with me. You're putting me on the spot here. Elevator pitch. People should work with me because, first and foremost, I'm trustworthy. I mean, that's the biggest thing. If I tell you something, I'm going to do it. I'm never going to promise the world and give you a globe.
Yeah, I completely agree with that. And I am a dreamer. And that's one thing why I like partnering with Ammon, because he's a realist. So when you have those two people to work together, I'll call him and say, hey, let's do this. And he's like, yeah, we might be able to do that. But
it's a good balance.
It's one of those things where you can bounce a lot of ideas off of each other. And we've squeaked some things through just because of talking about that. So that is a huge point, is having somebody that sees those numbers, is real about them, says, hey, this is what they want their monthly payment. This is what because they'll come to me. Like sometimes people come to me and say, hey, I want a $300,000 home. And I'm like, that's awesome. Let's go find you a $300,000 home. We find a $300,000 home and they're like, I don't want a $2,000 a month payment.
Right. That's right. And it also comes back to honesty. It's not just being realist, but it's being honest. And I have people come to me with, they're already I actually have one right now, already under contract. What do I qualify for? Can you beat this rate? And if I can, I'm going to tell them, you need to stick with that because it's your best bet.
Yeah, I think that's huge. Well, I appreciate you coming out today.
Thank you for having me.
Yeah. Again, I'm Dylan Fry, the real estate guy. I'm here to help you with any of your real estate needs. Licensed in Missouri. I'll help you buy, sell your home, whatever. Ammon Dorsey, and he's with Leader One. And
Missouri and Kansas.
He's going to be able to help you out, find you the best loan rates, the best loan program, anything like that. Now, if this is your first time to the channel, make sure that you hit that subscribe button. If you really like this video, hit that like button. Also, hit that little bell so you'll get notifications of our future interviews with different people that are going to help you in your move to the Kansas City area or your anything with real estate needs in the Kansas City area. We've got a bunch of different people lined up for coming up soon. So I really appreciate all the viewers, and see you next time.
See you next time.